Welcome back to Alpha Bytes, anonymous analysts talk show, where we talk about everything that actually matters in the crypto markets. I'm your host, Marconi Wight, and today I'm joined by the Dream Team Brain Team. There we go. That's better. From the Espresso newsletter, I've got Danny, I've got JJ, I've got Ben, Lilly, and I've got TD. Gentlemen, welcome. How are you all today?
Hey, guys.
Good.
All right.
Doing
a little
well.
bit of enthusiasm. Guys, I'm super excited to have the conversation today. I know we're going to get into some good topics like Pulsechain and stocks and shorting and OI interest. But before we get to that, I want to ask you guys a very personal question, which is, what would you say to Joe Biden if you met him in a coffee shop? And just to give you a little bit of context, I think everyone's aware right now there's debt negotiations happening, which is the belle of the ball in terms of content out there. And over the weekend, Joe Biden came out with this quote: "I'm not going to agree to a deal that protects wealthy tax cheats and crypto traders while putting food assistance at risk." Ooh. I thought to myself, I want to know what you guys would say. And maybe Ben, I'm gonna kick it off with you. What would you like to say to Uncle Joe?
Mr. President, let's sit back for a moment and let's think of how much money we could make if you tax businesses that actually existed in the US in crypto.
So I'm sorry, are you trying to appeal to his rational senses?
To his greed, let's make more money on taxes by encouraging innovation in businesses in the US to thrive and go ahead, make revenue, and go ahead and tax that.
I like that. I like that a lot. I'm gonna give that a thumbs up. That was a good one. All right, I want to hear from the rest of you guys. JJ, what would you say to Uncle Joe?
I'd ask him when he's returning the FTX donation money then. I believe SBF was his second biggest donor, and that's all directly from crypto. So
Ooh.
If you're going to make that judgment, you got to be fair, right?
Oh, ouch. I feel like you went for the jugular there. But I like it. I like it a lot. It's a great question. TD, what would you say? What would you ask?
And when is he going to fire Gensler, and when is he going to replace with someone that actually knows what's going on?
Are you suggesting that that they're actually confused and incompetent, rather this is all part of the plot?
Confused maybe, but incompetent absolutely.
Nice. All right, Kodi. I know he's not your president, but I want to know, what would you say to him?
Well, if he's scraping for change, he could just stop funding wars in Europe.
Oh!
The US has sent $75 billion in aid.
Oh! I'm sorry, just the wars in Europe part, I had to get it out there. That deserved a clap and more. Oh my gosh.
No, that's fine.
Well,
today the US has sent, and let me finish please, today the US has sent $75 billion in total aid. Like that's money that could be directed to hospitals, building roads, those people that Biden was talking about that he seems so concerned about. So instead of enabling.
How much money could Biden actually get from the crypto market? Forget that 2022 was an absolutely just decimated everybody. But if you go back to 2023, would he even get that much money from crypto traders?
Not even close. I mean, how many profits are crypto traders? I know I'm not one.
It's the biggest myth out there. You come in here to make money. I think most of us.
Everybody who makes money too knows how to play the game and offshore yourself. So it's not even like they're going to get the profitable ones anyway.
I thought to myself, no, when he says, I'm not going to do a deal to protect wealthy tax cheats and protect crypto traders, I thought that's right, because Gary Shades Gensler has made it impossible to protect any investors in this space by making it completely murky and impossible to understand how anybody who's operating legally, how they should operate. So actually, I think Uncle Joe is being completely consistent with the rest of the administration.
Just
incompetency.
What I see, it's like I just think we're perfect scapegoats, because everybody who doesn't own crypto or doesn't understand it just hates it because of the stigmas attached. And it's an easy way to blame everything on a small minority of people, which kind of government 101 playbook. Nobody's going to come to our defense, right? Like there's nobody who isn't in crypto that's going to be openly defending crypto, at least not yet. It's an easy mark.
JJ, I hear you. You're asking for us to be considered a minority, and therefore we deserve special status from Uncle Joe. So I'm going to go after that. Guys, I'm gonna reach out to him and see if perhaps they can just treat us with some nicer kid gloves. I'm not expecting that, but we're gonna see. Let's pick up and get to the meat of the show with what's on your screen. We've got some great topics today. As always, the crypto markets are boring. There's nothing to talk about except for the four things that we're going to be covering today. Kodi, I want to start off with you. You have something here with some data around Pulsechain that sounds pretty exciting. You want to walk us through it?
Yeah. So finally, Richard Hart's creation has been deployed. For the ones that don't know, Richard Hart created what some consider a meme or Ponzi token called Hex, which, for whatever reason, got to be one of the highest rated by market cap coins in crypto and in the last run. And yeah, his awaited fork of Ethereum has finally deployed. There's some changes to the chain. The consensus algorithm is changed a bit. The blocks, the block time is reduced, but basically it's just a straight fork of Ethereum. And it has managed to get almost $500 million in TVL in just a week with one single protocol on the chain. It's a Uni V2 fork. There's nothing else to do there aside from trading the token, the native token of the chain called PLS.
Yeah, so let me dive in here, Kodi, because this is a lot of information. Yes, when I think of Richard Hart, I go back many years to him debating people about Bitcoin, and then yes, I've seen bits and pieces. So, are you saying that this chain is really just a copy paste of Ethereum?
Yeah, 1-to-1. It has the same state, so it has the record of every transaction, user account, smart contract interaction. It doesn't have the smart contracts deployed, so that will need to be redeployed, but it has a bunch of ghost ERC20s, which basically have no value. It only has value for mimetic purposes, but like if you breach the Pulse chain, you will see unbacked USDT, unbacked USDC, unbacked any token that you hold is there. And people have been trading them.
Yeah, where is this liquidity coming from? I mean, who's going out there to this new crazy chain and using it? I mean, that's a lot of liquidity in a short amount of time.
A lot of people are bridging. Like cumulative deposits to date are almost 200 million. I think 170 million to date. And withdrawals only like 30 million. It is true though that I think the bridge wasn't really working on the way back, and it has only been open for like 2 days. But yeah, like
is that the sacrifice contract they call it?
No. That's just straight bridging. Aside from that, there's the sacrifice, which is like a pre-sale of sorts. I think it had like 700 million committed. So not even all of that's not the liquidity is on the chain even. So yeah, I mean, love him or hate him, and I know a lot of people hate him. Seems like Pulsechain is a success.
Yeah, okay.
The anti-hero.
Yeah, he's a hero. With that haircut and t-shirts, he's got to be. So, Kodi, break us down. I mean, you say it's a success, but are there some warning signs and risks here before people start just going full bore and bullying into this chain? I mean, you're talking about people bridging into it. I mean, are you concerned at all with the protocol, the consensus? I mean, are you seeing anything that this is just going to end up being a rug?
I don't think so, really. I mean, I am no blockchain engineer. I cannot tell you if there's some security issues with the chain. I know that the consensus it's just they call it proof of stake authority, and it's a breach of proof of stake and proof of authority. They basically got like the consensus from Ethereum, and they mixed it with consensus from BSC, and they also changed the block time. They reduced it from 15 seconds to 3 seconds to increase speed, but that doesn't change the underlying of the chain. So yeah, it feels like it's just gonna be there as out L1 and one that, again, for whatever reason, is
All right.
very successful.
And is anybody else on this call aping into Pulsechain?
I'm just trying to find the Explorer right now. And sure, they have some statistics on this plsburn.com site with the block height and some of the TVL. But I'm just kind of curious, like, what's the concentration of wallets? What's the velocity of these tokens? I just want to know more. I want to know more about the fundamentals. I want to see who's actually locking up these tokens, where they're locked up. Like, where are these potential areas where somebody could rug something? Just, it's more out of curiosity and fascination more than anything else.
Well, I guess it'll be very interesting to see what happens after 4 days, right? Or after an entire week. Who knows? Maybe in a couple of weeks, it'll be over a couple of billion, and the entire industry will be revolving around Pulsechain, a fork of Ethereum. Vitalik will just be hanging his head in shame, thinking, "What could have been?" All right, let's move on to the more sane markets, the equities. TD, what's on your radar?
The radar now is looking at this absolute skyrocketing line that's representing the price to sales ratio of the U.S. equities. And so basically, this is a chart we're looking at where the percentage of U.S. stocks trading at 10x sales ratio, price to sales ratio currently in the market. And we are at, the market is currently at roughly 25%. So that means 25% of the stocks in the U.S. market are trading at a 10x PS ratio or higher.
Yeah. So let me. Yeah, I want to add to that a little bit of color here for those who are just listening and no visual. The chart goes all the way back to 1980, and you see this sort of the chart has almost no growth. It's just between 0 and 5%, closer to 0% from 1980 to about 1996, and then it goes all the way up to 35% in 2000, which was the dot-com bubble. Then we have another 20 years. It obviously crashes. It's sitting there around 2008. It's back down to 0 again. And then over a 20-year cycle, now we're back up to 25%. So
what's interesting about that is like the hiking cycle was supposed to kill that kind of excess speculation and growth and whatnot, but it seems like nothing will kill that demand for these high growth potential stocks.
Absolutely. And the value growth is basically the value stocks now are pretty much not looking too good, but the growth stocks are actually going gangbusters again. So
yeah, like Nvidia, it's just on its arrow.
Yeah. Exactly. And so, with a combination of the factor, the debt ceiling issue, and obviously the demand for the consumption of goods is not there. We're also staring at the fact that unemployment is going to be rising, and the growth is obviously slowing down. And we still have excessive inflation pressure that is still in the system that really hasn't worked itself out of the system yet. And there are other stats I can throw at you. The housing market's going down as well.
All right. Well, TD, I got to break in here. You're doom and gloom all the time. Every time we're on here, you're just telling us how bad the macroeconomy is. And I keep on thinking you're coming in here like Thanos, just ready to snap your fingers and watch everything fall apart. But I want to ask you, my friend, you look at this chart, and you wrote a great piece that was published in the last week. For all the listeners, I suggest you check it out, looking at the Treasury buyback program and what that may actually signal. What do you think a common investor, a crypto investor, who's the audience we have here most typically, how do you think they look at the charts and data you look at, and how do they think an average person may position themselves? Are they sitting in stables and cash? Are they aping into growth stocks right now? What do you think that they may be doing?
I think the liquidity from the crypto market currently, we might see, assuming that the trajectory is still climbing up, I would say that we might see a revival in the crypto market just for a bit. The risk on sentiment is on, and I think a lot of people still believe that the Fed's going to pivot soon. and there'll be a lot more liquidity provided from the Fed's printing machine. So it's one of the harbingers where people are still, I guess, in denial that the fact that the Fed will probably keep the rates higher for longer. Or, I mean, pausing doesn't mean they're going to pivot. It just means that they're going to keep the rates there. And now, how long the Fed can keep the rates up there, that's up to anyone's debate. But the reality is that the intention here is to try to, now whether they want to move the goalpost and say, okay, you know what, the inflation is down to 3 to 4%. Sure, we'll wash our hands, call it a day. Again, that's up for debate. But the reality is they're still waiting for the excessive inflation pressure to exit the system, to work itself out. So I would say it's a bit premature to say that the Fed is looking to pivot and start turning on the printing press again. Now, with that said, but I think that's what the sentiment is currently on the growth stocks, and the especially just looking at this chart, it's just absolutely
it's just
a lot of that.
Crazy.
It's like the AI narrative, right? It's like people think these AI companies and stocks, it's just
yes, the narrative. Yeah, so they're looking for the latest and the greatest trend, and that's no different from the BRC20 hype that we've been observing lately. And so you ride the wave, ride the trend, and see what you can get out of it. And the FOMO is real, but again, just the fact that the fundamental's not there, and to do a 10x price to sales ratio, and if you look at the company's book, I would guarantee you that none of these companies would even, with the fundamentals, would even warrant to have that kind of stock price, equity price at this current juncture.
I think there's been warning signs for several years now that we're looking at just an inflated asset bubble market, and then this, I think, is just a great sign of that. JJ, I guess same question to you. Do you think, when you look at this and you think of traditional equities being overvalued, what do you think the traditional or the typical crypto person is thinking about how that relates to their portfolio?
I think any excess speculation ultimately finds its way to crypto, right? Like, if it, provided these things provide returns, like there's always the chance that these things just get rugged and causes a larger market crash, which would be negative for crypto. But it seems like risk finds its way down the curve. So if these stocks start generating higher returns, I think you'll kind of see it push down the risk curve over time. I think it would ultimately be bullish for crypto. And what I find most interesting about it is that the risk-free rate that's being offered right now isn't preventing investors from going into these extremely overvalued. If you just look at the book value of these things, right, the price to earnings ratio, it's not dissuading investors from investing into that. So it's like there's still this appetite to outperform. And I don't know if that's like remnants of the past bubble that we've seen over the 10 years, like people still don't really grasp the risk-free rate, or for whatever reason, they're just not interested. So I think for that purpose, I think it's ultimately bullish crypto because it's inflationary, right? People gambling is inflationary.
You heard it here. Ultimately bullish for crypto if it continues on. Let's actually transition JJ to what you're looking at, because I think it gives perhaps it maybe reinforces what you're saying or not. I don't know. We're looking at some record short positions. Do you want to walk us through what's on your radar, JJ?
Yeah, so short positions on the CME, particularly E-mini S&P 500 futures, are at the highest level since 2007. The thing about this is that what I find is, like, obviously anytime there's record short interest, that's vulnerability for a squeeze, but this is also what you would consider smart money. So hedge funds are the primary speculators on the CME, so they're a net short position there. As we see in 2007, they kind of front ran the crash of 2008 with these short positions. So it's not always a guarantee that just because there's large short interest, you're going to get a squeeze. But at the same time, it is notable, right, that you have this kind of divergence where we have all of these high growth stocks and you have people overly anxious to call the top on it and call the top on a bubble. And that's kind of a recipe for disaster. If you look at things like Tesla in, say, 2020, or what we saw obviously with crypto throughout 2020, 2021, is just overly anxious people getting ready to short something, prepare for it to get to zero, and they get ripped. So that's an interesting setup there. And kind of the sentiment, obviously, with all these things going on with the debt ceiling and what have you, is excessively bearish at present. It seems like there's no catalyst for higher. And sometimes that alone, especially if it attracts short interest, can be a catalyst for higher. And if we look at the Bitcoin stocks in particular, they have extremely high short interest to float ratios. So MicroStrategy, 27% short to float ratio. Mara, 25%. This is just kind of across the board. Everything's mostly up above 20%. Any Bitcoin stock you pick, it seems like people are betting on that as a proxy for just kind of a deflationary crash coming up. They think these things will fall further than Bitcoin. So it seems like they're speculating on that rather than Bitcoin futures on the CME.
So, TD, I want to actually toss the ball back to you and ask, your chart was looking at the excessive percentage of U.S. stocks trading at 10x sales ratio. If you look at the amount of short interest that is right now on the market, do you think that we're seeing some hedging that could, I guess, bring the bubble down that you've put in your chart a little bit, have a softer landing?
Potentially, but again, it all depends on the positions and depending on the retail sentiment as well as the it's always that old age battle of the smart money versus the retail money, right? And so depending on what as Gigi has alluded to, there just an overwhelming amount of open interest on the short side, and so whether that is actually, I guess, hedging or just the fact that they're taking the opposite of the retail trades, I think that remains to be seen.
Could be just like a barbell trade, right? Like if you want access to upside, you're going to go with the higher risk stuff and then short something like the S&P. So if you have a deflationary crash, you're not fully going to zero, but you have that upside of the bubble if it keeps going.
Right, it can be, but I think it depends on. I guess we'll have to look into the cost, how much would it cost for them to put that trade on, and to see how far of an option they have. So it depends on the kind of strategy they're adapting. But I tend to think that the current macro environment is not very conducive for stock market run. So I think there's something there. But again, I think it's still. It indicates, if anything else, it indicates one thing, that there's still too much liquidity in the system. And people are still flooded with money, and they still want to look for yield, look for gains. And obviously, I think, as we had alluded to before into our conversation, that people are not interested in 4 to 5% yield, looking for that kind of run. Right.
How much would you attribute to earnings here causing that statistic?
Earnings season seems. Our earning, it confirms the fact that actually, it painted a more rosy picture, obviously. But I think it also has to do with the fact that again, are they going to adjust their earnings later, or are they smoothed out over the years? Over the quarters, over the months. So that remains to be seen. But again, so far the trajectory seems to feel that people are just confident, and they're looking for the fundamentals, and it's not there, but at least just from numbers they feel that okay, well, something's got to at least give it a go. And also, like Gigi mentioned before, the AI and the trend, that is just currently just massive. And if you look at the valuation for all the AI, anything that's AI related is just blew everything out of the water. So
that could be like the crypto of 2020, 2021. It's just this AI thing.
That could be.
Yeah, you look at the year-to-date returns on the S&P 500, and the top companies are NVIDIA, Meta, AMD.
Yeah.
Yeah, I'm thinking about it's like, is it AI or is it AI adjacent? If I think about Meta, what they've tried to do with the actual metaverse, from what I understand, it's been an absolute disaster just in terms of adoption. Their core business model remains, and it's unclear whether or not it will be substantially impacted by AI going forward. I also would say you think about the Gartner hype cycle for AI, and it's really difficult to tell where we are and how quickly that will accelerate and how that will impact earnings, right? So many of the companies that I've seen, you just talked about NVIDIA, AMD, so they're sort of downstream. They're producers that are going to have components that are going to be leveraged in the AI cycle. But you have all these startups, which are basically SaaS programs that are leveraging ChatGPT. Just a huge number of them, and I imagine we'll see over the next 6 months to a year they'll be looking to Bard and some of the other AI solutions, but they're not the actual back end. So they're sitting on top of the model, and I have to wonder how much of that is actually going to capture value, or is the value just going to accrue to the consumer with very little earnings growth? I think it's a real unanswered question. I think NVIDIA and AMD perhaps are going to get the lion's share of the value there, and perhaps even some downstream, even commodities that are going into that. I'm not sure if you guys have a different perspective on the AI.
I'd have to get the stats on it, but NVIDIA, I know, had just people were shorting this every step of the way. So like a lot of times we assign the narrative after the move has happened. It's like, oh, it's an AI driven move, which yeah, partly, but also like it's just the order flow of it. You have a bunch of people trying to short something in a parabolic trend, and they got squeezed, and now we're all like, oh well, it's because AI is the next big thing and whatnot, and then it will reverse in a couple months or something, and we'll say AI was a failure. It's just constant ebb and flow, right?
I think most importantly, it's really about the subscription, depending on the monetization model, and see what they're gunning after. I mean, for a lot of these project, all these new sexy and kind of a flavor of the month type of deals, literally, if they have to pay open AI and all these different companies for algorithm and for the engine to run whatever that they're saying they're supposed to be doing the applications on, then obviously that cuts into their profit, and that cuts into their profit, and then the profitability and their monetization model will be under scrutiny.
Right.
That's one. So, but again, it depends. I mean, I was chatting with a friend of mine the other day, and we're saying that, okay, well, so obviously Microsoft has took a tremendous stake in open AI, and what if they do a bundle where, if you don't have Microsoft 365 or you don't have Office, heck, if you have Apple, sorry, you're going to be excluded out of this, right? We're going to make ChatGPT or OpenAI as part of our ecosystem here, and you can only access it if you have the subscription to Microsoft Suite or 365 or Windows. So it'd be interesting to see how this is going to shape up later on.
Yeah, more to come on the AI front. Well, as you said, we'll have to see sort of how this shakes out. But let's continue the conversation. Ben, I think you're also talking a little bit about open interest, if I'm not mistaken.
Yes, sir. Let's see. The chart that I was pulling up for my radar was the volume by strike price for Bitcoin options. So yeah, open interest in Q2 has been growing, but that's not necessarily why it's on my radar this week. It's more of the end of May's contracts are expiring this Thursday. For those that care, it's 8 a.m. UTC for Deribit on Thursdays. So we might start to see a bit of an unwind begin Wednesday evening, kind of just before that expiration hits. And the reason that I am watching for that is mostly because of the June contracts, which are the quarterly contracts. They tend to be more significant than the monthly. But what's interesting here is the structure does look to change a little bit in the options market. And if we were to measure this change with, we call it max pain, and max pain for May contracts sit at 27,000. And it's kind of helpful to use that stat to get a basic idea of market structure. And the max pain price level, it can be considered where the least amount of insurance payouts happen. It's the price where the expiry results in the most amount of contracts expiring worthless, which means market makers, they don't need to pay out those that tried to hedge themselves. So again, May, that max pain point is 27K. We're recording Monday morning, New York City time, and right now price is 26.9K. So it's right there. But for June, the max pain point is 24,000. That's a pretty significant change. So once this unwind for May takes place, contracts expire, we're now looking at end of June, and the structure should be changing. The flow should represent that change. And it should be interesting. I mean, one of the stats I've been watching for, I think, 2 months now, as volatility has completely compressed, is cumulative volume delta. So just it's essentially demand of the market, and you can break it down between spot and futures. And for spot, over the past 2 months, it's been declining, and it's been very forward-looking for trends. If you've been watching that market unfold since, I think, December, it's kind of dictated the market. It's not looking good right now. This morning, we had a bit of a liquidation on high leverage shorts that took place. Price is probably going to recoil a little bit back to normal. And is CVD spot and what it has been predicting over the past few months going to continue, and these flows change later this week? Is that going to result in one thing I've been talking about, which is a sweep lower in markets, which I think is a little bit different than what a lot of us have been mentioning here on the call, but I'm watching out for that. I feel like that sweep needs to happen. There needs to be a little bit of renewed interest, renewed volume, and kind of new positions need to be taken up in the market to get that
Ben,
going.
let me come in there, because that was a lot of good information. Are you saying that over the last 2 months we've been seeing more options driven versus spot driven volume? Did I hear that correctly?
So ever since post FTX, I would call it, is spot demand. So versus futures, right? With spot, you're actually purchasing, say, Bitcoin, if we're looking at the Bitcoin market, where in the futures market, you're opening up a contract, a position. So those two markets, if you segregate the two and you actually just focus on what has the volume been saying when it comes to the spot markets, it's been anticipating moves higher and lower since late last year. And then since the last 2 months, it's really been pulling it up. Actually, since, I should say, the end of April, it's just been declining. And so we've been trading sideways for most of that time period. And it's not reflecting
illiquid, right? Like you were saying, like there needs to be some kind of event, higher or lower, to just get some more liquidity in the markets, like get people interested in participating. Because right now it's like 5 people trading, not going anywhere.
Yeah, and sometimes the easiest way to get new liquidity is kind of shock the system.
Yeah.
Mm-hmm.
Absolutely. I mean, right now there's really nothing going on. I mean, it's just the order book's thin, and it's just no action.
Yeah.
Period.
Selling vol has been the best trade for the past, since the banking crisis, basically. That first sweep at 30K, it's just been drained.
So, okay. So
I think that's something you've been saying, JJ. Everyone's been selling vol, but where's the vol?
Yeah, it's just non-existent. There's like the way like the risk reward of selling volatility, like I understand it. Yeah, like things can just keep going sideways forever and just keep bleeding out volatility. But sooner or later, like you're saying, I think we'll either drop down to like that 22K range, or we'll take out the highs and go to 32 to 36K. And it's probably going to happen rather quickly, probably within like a 2 to 3 day span. You see those violent moves happen, and that would
and that liquidity at like 30,000, just above 30,000, it just keeps piling up.
Well, yeah.
Sooner or later, that gets tapped. You know what I mean? Like you can't paint a bullseye that big and just get away with it.
Just how do you get there? And that's really like, you got to bring in more activity. You got to bring in more participants. The liquidity needs to come in and shock it. That's kind of been, I think, the past week and a half, 2 weeks have been.
So let me come back. You mentioned that you've also been looking at sort of this breakdown. I think last week when we spoke, you were talking about maybe dipping just below the 200. And sort of this signal that we may see that the bear market has finally started to come, to an end, and we're really starting to create that bottom, which will give us the next bull market. When you're looking at this data, how does that sort of work and relate to that idea? Is this going to signal, if we see that flashpoint going down to 24, 22, 20, is that going to reconfirm that thesis?
So that thesis is, what has the market done historically coming out of cyclical bottoms right before a halving unfolds? The halving is April 2024, I believe, right now. And typically less than a year beforehand, we'll get price to retest that 200-day moving average, and it will fail. And so we end up causing a little bit of, if you want to call it hesitation, panic, or kind of people paper handing Bitcoin and selling off of fear. Like, we haven't had that moment. And if we get that moment, it's really just to prepare myself mentally, I would say, is if we see that, you don't need to be fearful. This has happened, and historically it has represented one of the best moments to buy, to market buy, or even just begin dollar cost averaging moving forward, going into the halving. Now, if it doesn't happen, that doesn't change anything in my mind. I'm still looking at day to day, week to week, month to month. This is more of, if this were to happen, when would it happen? And we're at the end of May here, and looking at prior timelines, June, July has been, and even August is when that moment would take place. Is this the moment that we dip below the 200-day moving average, cause market panic, and then move higher? It could be, but I'm not going to kind of pigeonhole myself into something like that.
Fair enough. I feel like El Capo's
like
moment is still down the road. JJ, what were you saying?
If like people keep adding liquidity to shorts, and it's like, okay, we know if we can push price up to say 32K, there's whatever $10 billion short bounty that you can squeeze out of the market. That works as like a magnet. So like there's that saying, you know, you don't short a dull market, and that like it's kind of path dependent. So it's all like complex adaptive systems, is that if people add a ton of long liquidity here, price is going to go down. If they shorten this range, it's going to go up. So it's like, it's very dependent on what market participants do with their liquidity here, and which way kind of puts the incentive to move price in that direction when things are this illiquid. Is that if you start seeing people get too greedy with short positioning, like just what we saw this morning in that small move, is that there was a ton of liquidity above 27K, so naturally price moved there. And you could see the same thing on like a
and that was high leverage. That was high leverage. And so once you start seeing those kind of degen position taking moves like that and just getting wiped out, and you get the old BART images start to populate your timelines, eventually we're going to have to go seek out some bigger pools. And that's when the bigger moves out of trading ranges tend to surface.
And that brings in liquidity from the sidelines too. Like if Bitcoin's over 30,000, you might have a lot more retail buying, right? Is like the narrative starts to catch on, social media buzz, those things. On the opposite side of that, if price goes down, you might get some of the bigger wallets like institutionals and whatnot interested in buying sub 20K, say, because they see it as good risk reward.
So I think if you're in the markets and you're looking to trade, you need to be checking out this show every single week to hear what we're thinking about, what we're seeing in terms of liquidity, because it really is a week to week kind of activity, really day to day, but we can at least give you something week to week to be thinking about.
Very much so.
All right. Guys, let's move on to our next segment. We got Pump It and Dump It, and this is where we give some of the most interesting ideas we've seen in DeFi and on-chain in the week to our resident big brain, Kodi, and he lets us know whether he would pump it or dump it. Kodi, you there? You ready?
Yeah, I'm here.
Okay.
I feel more smooth brain than big brain today, but
more smooth brain. Okay. All right. So to everyone out there in the audience, don't take anything he says seriously today. No, I would. I always take him seriously. All right. So the very first one we had here was LIDO had a proposal for staking. Pump it or dump it?
Well, I'm gonna go over the proposal first. The proposal is not mainly about staking. It is mainly about implementing a revenue share for LIDO. So a percentage of the fees would go back to LIDO stakers, and it would be implementing through a buyback. And although I like the idea in general, I have to dump it. I don't think the proposal as it stands makes that much sense. I don't like that it would buy back LIDO and then redistribute that to stakers in LIDO, because that just means that people that receive LIDO as dividends, because that's what it is, they're just going to sell it. So it creates endless sell pressure for LIDO.
Right.
It also purports to use LIDO as a backstop. which is not a great idea because people would sell the token if things go south. And yeah, the payout for LIDO stakers is also controlled through governance. So you get all sorts of misaligned incentives. People just voting to give more money to themselves.
For a smooth brain, you're giving a pretty reasoned explanation for your dump it. So I think you've done a pretty good job. Let's look at the next one we got here. We've got Curve USD, which nothing more to say. Curve USD, pump it or dump it?
Pump it. Like if you look at the Curve USD, how it works is basically just DAI with some bells and whistles, and if someone can take DAI's crown, is Curve, as it's still leading stablecoin AMM. So pump it to the ground.
All right. So okay, you said it's like DAI with some bells and whistles. So is it like a McDonald's Big Mac compared to something from Burger King?
Well, I hope not to offend anyone, but Burger King. But
you're totally going to trigger some people on
that. I know I will. I think it might just be different in Spain, to be honest.
Okay. Fair enough. I don't want to offend our massive audience on this first show that's actually going public out there. All right, we got the next one here. We got BRC20. We've been talking a lot about this, but every week we got more activity. So BRC20, pump it or dump it?
Pump it. Like 50% of all transactions on Bitcoin last month was for ordinals. They cleared like $8 million in fees. Yeah, it's good seeing such activity on Bitcoin. As much as it has some big energies.
That could be a catalyst for those minor stocks too. Like I was saying, how they have
such
short interest. I don't think these people are shorting them, or at least I would say 50% of the short interest. I don't think they're aware of like this sudden change in fee structure.
Right.
I haven't seen miners this bullish in a long time at that Bitcoin Miami conference.
Well,
really?
I mean,
and look at
they're
how
making
far
money
down.
hand over fist. That would be bullish as well.
Like I'm sorry to go off the rails here, but the short interest at this level, when it's so far down from all-time highs, like it's insane. I can't rationalize it knowing what you know about the BRC20 and these increased fees. It's an interesting proposition there for minor longs.
All right, so you hear just pump it from everybody on the phone, including the other giga brains that are chiming in. All right, let's get to the last one we got here. We got Lybra Finance and eUSD, an interest-bearing stable token backed by ETH and staked ETH. Pump it or dump it?
Pump it. I really like their mechanism. You just give them ETH or staked ETH, and the fees that they get from staking, they redistribute to eUSD holders. And it works just as DAI, basically. Again, you give collateral and has a certain collateral ratio, and you get a stablecoin in exchange. But in this one, you get 7, 5, 6% interest on top. I think that's good.
All right. So we got 3 pumps, 1 dump. I think we're going to have to start bringing on some really bad takes here, because everything you just seem to be really, really pleased with, which, I guess we want to give the audience some optimism here, because with everything going on in the macroeconomy, sometimes we have some doldrums. But of course, with that, we're going to head into the last segment here, which is headlines, which I got to be honest, it's not always the cheeriest of place to be. We're going to start here. I want to get everyone's take on what happened with Ledger in the last week. They had a bit of a marketing snafu, which I think was more of a product snafu, but as some are aware, they announced a new seed recovery option. And there were questions about whether or not this would allow other people outside of the owner of the actual physical hard drive or hardware to be able to get access to the actual seed. And from the Ledger CTO, he communicated this through Twitter. He said, quote, "Technically speaking, it is and always has been possible to write firmware that facilitates key extraction. You have always trusted Ledger not to deploy such firmware, whether you knew it or not." So guys, I'm curious what the audience thinks about Ledger's take, and was it just a marketing blunder? Was this a product blunder, or has the market just never really understood the technology that's securing literally billions of dollars of crypto?
Seems like bait and switch. Like there's actual tweets of them saying that from the past, saying that there was no way to backdoor it. That's air gapped security, and now they're saying, oh, well, there was always this backdoor, you just didn't know it. So I think there should probably be some legal action on that front. It's one thing if you tell people that, but kind of the way they hit it and now they're like doubling down on it, it just seems really weird and bad. So I'd stay away from all things Ledger personally.
Top 4 manufacturers control 60% of the market. And what I wonder is, did he just say the silent part out loud? Is this happening more than just with Ledger and possibly other hardware wallets? I'm not a cryptography expert, but that's been on the forefront of my mind as this news hit.
Yeah. Go multi-sig.
I think it's really more about, again, technology that I think a few people understand, and obviously there's always options. I mean, you know that they can always tap it in. All right, now, and reflecting on what JJ and Ben just said, it's really perhaps it's always there. It's just that they don't choose to talk about it. They just kind of gloss over. They just put a cover over it, and that's it. But now the truth's coming out, and they're gonna either do damage control or just kind of make it sound like, oh well, it's always been there, so it's nothing new,
And it's worse with them because they had their emails hacked, people's information, address. To be able to social engineer a hack now
repeat offender
has gone up a lot.
Yep. And plus, like, what's the purpose of holding anything in a hardware wallet is that it can't be confiscated, right? And now it's vulnerable to, if the government says, hey, this person is a bad person, we need the backdoor access to their keys, they locate it, and then your money's gone. So it kind of takes away the immutability of it and all of the value propositions that come along with cold storage. You just have
that's an interesting thought exercise. If a warrant lands on Ledger's desk,
what do you think they're going to bend? I'm sure that's probably a large part of the reason why that's in there, and they're just using other reasoning for it. But that's kind of sends up my alarm signals when I see stuff like that.
Oh yeah, that's a multi-billion-dollar company. They're not going to jeopardize that.
Kodi, any thoughts there you want to share?
I don't know. I think they will get a slap on the wrist. I don't think much will happen there.
Oh, the contrarian take. You think it will die down?
Yeah. I don't know. Yes, basically, yes.
The question is how do you restore the trust, right? I mean, how do you know that, okay, well, yeah, so my wallet is safe, my asset is safe. Right? I mean, I mean, that's like squeezing toothpaste out of the tube, but I don't think that thing's going bad.
Yeah.
So.
I agree with the takes. I think there's a lot of perspectives here that have me wondering the same question. Is this the same question or same issue for all the hardware wallets? And also, how do they restore trust? Are they going to have to rebrand? We see companies right now struggling with some branding. I don't think I have to name them specifically, trying to restore trust of customers. And with this is your money. Right. This is for some people, it could be a significant amount of their funds. So I do wonder what it means for services like Casa HODL that offer multi-sig and anything else that would offer a multi-sig. Is that going to continue to grow and adopt for some part of the market if the complexity can come down? But that remains to be seen.
It's so hard for the average person to understand those things.
Yeah,
take an interest.
I think understanding the hardware wallets is difficult for the average person, let alone a multi-sig.
Yeah. The last time I looked at cryptography, just anything having to do with it, was probably 2015. Just trying to learn what Bitcoin was. 2014, I can't even remember anymore. It's on nobody's radar.
Yeah, we forget how small our niche is, right? We're so far down the rabbit hole that we're like outraged about these things, and people don't care.
Well,
sadly,
I think bigger implication here is that how will this also kind of actually throws another bucket of cold water over the head of the crypto industry or the cryptocurrency, in general, right? Oh, you guys can't even keep your wallet secure. Why should average layman invest? Why should normies coming in if they can even have a proper hard wallet to secure their asset.
Well,
So,
let's invert this for a minute. What if, in fact, this is a catalyst to bring in people that are terrified of losing their seed, right? That had to be part of the discussion that they had when they were looking at this feature. And if a lot of normies are saying, I want to get access to digital assets, I prefer to have a custodian like a bank or a trading firm, or I'd prefer a wallet that I have 100% confidence I can restore. Is it possible that this could actually be a good service to offer the market for the people that are concerned with seed recovery?
I think there's definitely a
I
demand.
think it is. I think most normies would prefer.
That's no
Sorry,
different.
TD.
That's no different than exchange, right?
Marconi, moderate.
Yeah, I'm getting in here. All right, calm down, that little man. All right, JJ, Grumpy the janitor. Kodi, what were you saying?
No, I was just saying that actually most normies would like that, right? Like I for one, I'm completely scared of losing access to one of my wallets, and I cannot for the life of me like imagine my mom or my grandma trying to have one of these wallets and like having to remember 12 or 14 password, like 14 words and whatever passwords are. Like basically every normie out there would prefer to know that if something goes badly, there's a company behind it that can rescue your assets.
Well, I think you've actually identified why Uncle Joe is actually against crypto, because he can't remember the 12-word seed phrase. He probably can't remember more than a few words. TD, you were saying something when I was asked to moderate by JJ.
No, I'm just saying that. That is really. It's almost like you're saying, okay, well, I'm going to ask someone to hold my custodial service, and so it's like, that's like banking, right? Right now, it's like, okay, how is it different from this traditional finance of banking, where you just throw your money in the bank and open an account, and they have to the custody of your money, and you just go there, withdraw your money whenever you want, or transfer and stuff like that. Which I thought that it's a very that kind of goes against every single grain of
Well, yeah.
Can I jump in here real quick? Because the timing of it is no coincidence in my mind. Account abstraction's hitting with Ethereum. Everybody's going head over heels, and the solutions around account abstraction and that EIP is starting to hit the market now. I forget which was the most recent one last week, but I know One Avocado is another solution. Then that's the response, right? They're trying to make it easier, and they're trying to show possibly investors that they are responding to what is about to unfold, because that does allow a platform or a protocol to essentially roll out a very friendly UI UX that they no longer need to go ahead and log into Ledger.
Would that platform be JP Morgan?
No, it's Bank of America. Come on, TD. We all know it's Bank of America. What's also interesting about this conversation is, for a group of guys that are in crypto for a long time, there's a lot of perspectives on the implications of this. And although we don't talk about cryptology, this entire conversation prior to this news event was about trading in the markets, there's so much to take out of this in terms of the philosophy, what's actually on people's minds in terms of what's going to create adoption, what's going to slow adoption. I find that interesting. I'd love to hear if you're in the audience, you're hearing this, if you find it interesting, something you'd like to discuss more. But let's move on. There's just a few other topics here we can cover that I thought was kind of interesting this week. Tether announced that they're allocating 50% of their profits to Bitcoin. Now, as I understand it, this is outside of any Bitcoin that they own custodially that they're using for their operations. This is a little bit more akin to what we're seeing from like a Michael Saylor from MicroStrategy. Did you guys have a perspective on this? It didn't seem to really move the needle at all in terms of price action. So I'm not sure if the market just doesn't care or they actually see it as bearish.
I think it's interesting. Like, they're kind of the plunge protection team of Bitcoin now. And so the higher they raise rates, obviously that's bearish Bitcoin. It's a liquidity drain. But Tether understands that there's no Tether if there's no Bitcoin, and it's in their best interest to keep some sort of floor for the price. So I think they'll be them moving their insane profits, which is, what are they, like the 5th most profitable company in the world or something right now? Billions and billions of dollars a quarter. Them moving that into Bitcoin is going to be a net good over time, provided that they don't get stung up by the DOJ or some sort of something that would make it like where they have to sell this Bitcoin where it gets repossessed, or Luna type situation where it gets forced sold. Obviously, it's not like Luna where it was backing the stablecoin itself, so that's good.
Yeah.
But it just makes me weary that if they ever get hemmed up, that Bitcoin could become distressed.
Well, what's your perspective on whales just accumulating the largest portion? This seems very much anti the idea of decentralization, of sort of why, as TD was talking about. I mean, a lot of people came into the space thinking they wanted a different system. Then we just see everything being accumulated by large actors.
Well, I think that's like a normal progression for it, because it's going to start, like, if it ever is to reach its end game, right? It starts off as speculative, where a bunch of people understand the technology and what it could be in the future, so they want to hoard it. But the thing is that it's finite, right? So inevitably, if things play out the way that it's projected for them to, then the supply would decentralize itself as you start paying for things in Bitcoin. And whether or not it gets to that point, who knows? But it would. Supply would decentralize over time if it can't be borrowed against, or things like, if it doesn't turn into just an extension of kind of the fiat world, then you would see the supply migrate out.
I heard a chuckle from Kodi when you mentioned paying for items with Bitcoin.
Yeah. and I am still the optimist. Yeah. But yeah, going back to the issue at hand, like, I think the news are great, and like that they are providing this basically by like the demand is great for Bitcoin long term. They like, I think Paolo and the team behind Tether, one of the most ardent Bitcoin believers. What they didn't like much was the price action just after the news. As you said, it was kind of muted. It certainly wasn't bullish. And to me, this was quite bullish news. So I don't know, if you start getting bullish, or what are supposed to be news that should impact price upwards, and that doesn't happen, and Bitcoin actually sells off on those kind of news, I would say that's quite a bearish indication.
Yeah.
I think we are in a bit of an echo bubble. Like, you see the buying that's happened since the bottom, and it's been MicroStrategy, Tether, just the same people that have always been here on the same carousel ride. So it's not really new money entering, and it's just probably confirmation that this has been an echo bubble so far this year rather than a new cycle.
Yeah, so I guess it remains to be seen. As you said, JJ, it's got some plunge protection associated with it. We really didn't see a catalyst. Of course, we're still arguably somewhere at the tail end or closer to the middle part of a bear market. So it's possible that news like this just isn't going to move the needle that much. But I do want to cover one last topic here that I made me think about adoption. And Kodi, I was thinking about you specifically. And the headline was that Pakistan is looking to ban crypto. And the article came from CoinDesk. And the point that I found interesting was a quote from one of the people I interviewed for the article, Ali Farid Khawaja. I very much doubt I pronounced that correctly. But here's what he said. He said, I suspect that many people are buying USDT on crypto platforms as a way to get exposure to the US dollar. Even Bitcoin has performed well against the Pakistani rupee during the crypto run. Reportedly, more than 20 million Pakistanis had opened accounts on crypto platforms. Now, the article goes on to really highlight the use case for stablecoins, which I think, Kodi, you've talked about before. And when I look at this and I think, is there a divergence occurring, which is in the emerging world, you're seeing people adopt stablecoins. In the developed world, you see more adoption of the riskier assets, which is more about trying to find that yield. Whereas here, people are trying to get access to dollars because, frankly, their local currency is just absolutely being destroyed. So I don't know, Kodi, what's your perspective when you hear a use case or a story like that?
Yeah, I mean, I think I think stablecoins are one of the killer apps in crypto, and it's like in countries which have like if you look at Pakistan, like inflation there has gone up to like 36% or something since 2021. So yeah, people just wanna keep their money. Like they don't wanna be eroded away in their savings. And in the West, people are looking for yield and are looking at risk assets to like try and increase their pie. In countries which have financial repression, people are just trying to survive, to keep whatever money they have safe and not lose it all in like a couple of years.
I think that's kind of the story across the board. Is like inflation just turns everybody into a forex trader essentially, and we're all just trying to outperform our country's inflation rate. So if you're in India, you need to outperform the Indian inflation rate, and in America, what are you going to do if you're on the dollar standard? You look to gold, Bitcoin, speculative things just to try and not go broke from inflation. So it just pushes
I'd love
everybody on
to
the
hear
risk curve.
a reporter asked Powell in one of his press conferences about a statistic like this, just to see what he has to say, because that's essentially exporting the dollar, and whatever he ends up doing becomes more of a global phenomena just as a result of embracing this type of technology and innovation. This is what, if his end goal is what I think some people, especially the conspiracy side of things, is this is going to line up with those sorts of thoughts.
TD, I'll give you the last word on this.
Yeah. It's all about capital preservation and make sure that your loaf of bread doesn't go up 200%, from the morning to the afternoon. And, it's a matter of looking at, for instance, Argentina, the interest rate now is at 97%, right? Because they're fighting inflation at over 100%. And this is just, I think, since 2023, beginning of this year. So if you hold anything in its own native currency, you're not going to get anything. You literally, your asset and value just get eaten away. Whereas if you hold USDT now by all these countries that use it as a proxy for US dollar, at least they know that and this is where possibly where the cryptocurrency that is coming in, where we said before that it could be the new barter system for the parallel economy, that they can use it to transact. And so in several ways, again, I think it's good, as in that we are seeing this live and playing it out right before our eyes, and see if the system really works and if it's robust. And if it is, we will be able to either, if the government has the capacity, or they are innovative enough to incorporate that into the new system, that whatever it might be that's coming, hopefully, then that's
So
or
we're going to see how it plays out. I'm going to sum up your idea by the local citizens saying, "I don't want to be Weimar'd." They don't want to lose everything to Weimar style inflation. Guys, that's going to that's going to wrap up this week's show. I want to thank Kodi, JJ, TD, and Ben Lilly for joining me today, dropping their insights, giving us something to think about over the next 7 days. If you haven't already, and you are missing out if you haven't already, go check them out at the Espresso newsletter. I'll drop a link in the description below. Also put on some of the social media profiles. You can go follow them on Twitter or wherever else that they hang out. Let us know in the comments what it is that you thought we got right, what it is we got wrong. Let us know what questions you have. And for a select few, we promise to bring those questions into the next episode. Until next time, be good, be safe out there in the crypto markets. They're crazy. And as we just found out today, we got some shocks that could be coming in. So just be prepared. But until next time, take care.